Hello, this is the TradeSight Forex Market Preview and International Economic Data Roadmap for the week beginning Sunday, the 2nd of February 2014 and ending Friday the 7th. Hope you've had a good trading week. Charts, as usual, brought to you by eSignal 11. I'm going to walk through where we're at with the charts, as usual, look at the action that we just saw this last week, and then look at the preview of what's coming this next week and try to pick out what we need to dodge, what we can expect moving forward. So here's a look at the dollar index daily chart. What's amazing is I just did the total for January. Our main calls did register about 155 pips of gains, which I consider to be a decent month. We had a nice year last year. Those are posted in the market blog, the totals for the year. We ended up winning 55.5% of our trades in January. That's pretty remarkable when you consider that the dollar index has basically been in a 1.5 range since November 1st. I don't know the last time I saw that, but usually when the market gets this flat, it's not good for trading, and we've managed to eke it out. So I'm really happy about that. So this is the dollar index daily chart, and you can see that we've got the 13 sell signal back here from the seeker in early January, and while I didn't expect that to roll the market because we weren't extended by any stretch of the imagination, we're still inside the 9-bar setup phase. The exhaustion signal comes there. The risk line is the pink line. It has contained the market so far. We did start to roll, but this week we crawled our way back up. At this point, I'd consider that signal pretty much done, so we'll see what happens. But this risk line will be interesting if we touch it. And then you've got a green static trend line up here and a red one down here, and this range is in the middle of it. Love to see the Forex market start to get more active and get these ranges expanded so we can get back to trading a little more actively. But so far, I'm still half size because of what we've seen here. Now, we'll take a look at the euro dollar daily chart. Starting to roll a little bit, but we're right on that red static trend line. So this could be a little support level here. There's no Comer or seeker counts in play, nothing to get excited about. The pound does have a sell signal, and this is what's interesting. Remember, this a move down here is for strength in the dollar. So we've got sell signals on the pound and sell signals on the dollar index at the same time. One of these things cannot hold. But again, most of these are minor signals. This one's a little stronger than the dollar was because it was a little more extended. So maybe this target comes into play. The dollar index finally turns and moves up, breaks that risk line on the prior chart we looked at, and then this starts to head down towards this static trend line. But the euro is already on its static trend line. We'll take a quick look also at the Aussie. You'll excuse my alerts as the market's still open here. Look at this 13 sell signal back in October. Boom. That was right on the money, wasn't it? All right, let's take a look at the intra-week action here. Here's 30-minute bars on the dollar index. That doesn't tell you much, but let's take a look at some of the other pairs and their action for the week. Euro dollar, about 200 pips for the week, basically, of range. Look how bad Thursday was, though. You're looking at this is Friday, this is Thursday, this is Wednesday. Let me back it up just a little bit. There's Tuesday and there's Monday. So there's the whole week now. And the euro dollar, it does reach a little higher. So we'll call it 220 pips of range. But look at all this flat action. This is horrible. One day of movement, and then Friday. Really fortunate that we closed out the month the way that we did. We ended up this week with a couple of decent winners, and we had closed out last week with some real nice winners. So, can't complain when the market's not moving and you're making money. We do like to see movement the way our trading system works. Here's the pound, a little more active this week. Went up first, got flat for a couple days, and then dropped here, and then flat again. This one has, you're looking at 200 pips of range as well. Again, keep in mind, average daily range over the years on the pound is usually 130 pips per day. Now, if you add that up over 5 days, the average weekly range is usually more like 380 pips, and we're only seeing 220. And these were actually an improvement on a couple weeks. So we're still not seeing great ranges that we like to see. So that's the look of the week, and not a lot of signals in general, just our regular trade calls and nothing more. Let's take a look now at the data coming out this week, starting Sunday, February 2nd, bank holiday in China, building approvals out of Australia, non-manufacturing PMI out of China. Going into Monday, we've got Australia's commodity prices, Spanish manufacturing PMI, all the manufacturing PMI data out of all the European countries. We've got Canada's RMPI and IPPI. We got the manufacturing PMI out of the U.S. and the ISM data. Construction spending here, vehicle sales at 2 p.m. Eastern Time. Japan monetary base Monday evening. More bank holidays out of China. Cash rate announcement, that's the Bank of Australia at 10:30 p.m. Eastern Time Monday night. 10-year bond auction out of Japan. Spanish unemployment change out of Europe. Halifax HPI construction PMI, Italian preliminary CPI, PPI out of Europe. In the U.S. Tuesday morning, we've got factory orders. New Zealand's unemployment and labor cost index, unemployment rate and labor cost index, still a bank holiday, third day for the week in China, and Japan's average cash earnings. We go on to a Wednesday, Spanish services PMI, all the services PMI data out of Europe after the manufacturing data. Retail sales out of Europe. U.S. we've got non-farm employment change, the ADP number. Final services PMI, ISM non-manufacturing PMI. We've got crude oil inventories Wednesday as usual. Bank holiday in New Zealand and China again, so I guess China's out for the week, it looks like. Retail sales and trade balance out of Australia. That's a big moment at 7:30 p.m. Eastern Time Wednesday night for Australia, for the Aussie. Trade balance out of Switzerland going into Thursday. Retail PMI out of Europe. German factory orders out of Europe. We've got the Bank of England's got their rate announcement here, and so does the ECB. That's the European Bank. So Thursday morning, early here in the U.S., we're going to have some rate announcements out of Europe. And then we hit also, this is convenient, trade balance, the unemployment claims out of the U.S. Thursday morning. So here's the deal. We're going to be half size anyways because we're still half size due to the ranges. The main night that we have to worry about data, we've got it all in one slew. We've got the bank announcement out of England and the UK bank announcement out of broad Europe, and then the U.S. trade balance. That's one of our big three each month. So all that means we'll be even less than normal. It'll be half size of whatever you're trading going into Thursday with all that data. Other than that, there's not much to dodge. It doesn't look like here. There's natty gas here in the U.S., AIG Construction Index out of Australia. Friday, leading indicators out of Japan, German trade balance, French trade balance, retail sales out of Switzerland, UK trade balance, industrial production, manufacturing production, German industrial production. We've also got our, there it is, our unemployment rate, non-farm payroll data. That's another one of our big three here in the U.S. along with the one in Canada. So we'll be half or lesser size going into Friday as well with that. Consumer credit in the afternoon on Friday. What did we just get behind us? First month of the year is done, come and gone. Core earnings for the year, for the fourth quarter, come and gone. First look at GDP here in the U.S. Came and went this week, and we had our first Fed meeting of the year, not another one for 6 weeks. So all that type of junk that the market tends to sit around and wait for people to put out that type of news is all now behind us. So instead, we can focus on some of this lesser data, which usually gives us better trading opportunities. But the back end of the week is packed with the big stuff, so we'll be less size going into Thursday, going into Friday than we will be early in the week. But I'm still half size in general or less until I see these ranges expand, and they just haven't done it yet. You want to see that dollar index. That's the key. Watch the dollar index. Let's see if we can get some movement, get out of that rut. All right, everybody have a great trading week. We will be here calling it as usual, helping you make money. Have a great weekend as well.